Hello, and welcome to Alpha Revolution YouTube channel. If you're new here, make sure to hit that subscribe button so you don't miss any future videos. Did you know? Education and organization are two important factors in guaranteeing the financial health of your company. Often, the success of your small business is due to your expertise in producing your product or offering your service. Unfortunately, you may not be an expert in other critical aspects of running a business, such as financial management. If you don't have much expertise managing business money, it might be difficult, but it's also critical to your company's existence. Here's how to develop sound financial habits that will propel your company forward. Here are a few things you should do as a small business owner to keep your finances in order. Number 1. Take care and pay of yourself. It can be tempting to devote everything into your day-to-day operations if you own a small or mid-sized business, SMBE. After all, that extra cash can typically go a long way towards assisting your company's growth. According to Alexander Lowry, professor and head of Gordon College's Master of Science in Financial Analysis program, small business owners should not forget their personal position in the company and should compensate themselves accordingly. You want to make sure that your personal and corporate finances are in good shape. Many SMB owners, especially at the outset, neglect to pay themselves. They believe that getting the business up and running and paying everyone else is more important. However, if the business fails, you will never have paid yourself. Remember, you are a part of the business, and you must compensate yourself in the same way that you compensate others. Number 2. Invest in growth. Setting money aside and researching development options will help your firm expand and move in a good financial path. Tobias Financial Advisors Chief Operating Officer Edgar Collado believes that business owners should always keep an eye on the future. A small business that wants to continue to grow, innovate, and attract the best employees should demonstrate that they are willing to invest in the future, he says. The improved level of service will be appreciated by customers. Employees will value your investment in the company and in their career. And you will add more value to your company than if you spent all of your revenues on personal problems. Number 3. Don't be afraid about borrowing money. Loans might cause business owners to be concerned about the financial consequences of failure. However, without the influx of funds provided by loans, you may encounter significant obstacles when attempting to purchase equipment or expand your workforce. You can also use loan proceeds to increase your cash flow, making it easier to pay staff and suppliers on time. Furthermore, the greatest business loans have terms and interest rates that many small business owners can easily accommodate. Number 4. Maintain strong business credit. As your business expands, you may wish to purchase more commercial real estate, obtain additional insurance policies, and obtain further financing to help these endeavors. Obtaining approval for these trades and acquisitions may be more challenging if your business has low credit. Pay off all debt funding as quickly as possible to maintain good credit. For example, don't carry a balance on your company credit cards for more than a few weeks. Similarly, do not take out loans with interest rates you cannot afford. Only seek cash that you can return promptly and easily. Number 5. Develop an effective billing approach. Every business owner has a customer who is perpetually late with their bills and payments. Managing small business finances also include managing cash flow to guarantee your company runs smoothly on a daily basis. If you're having trouble collecting from a specific customer or client, it might be time to get creative with how you bill them. Too much cash tied up in unpaid invoices can lead to cash flow problems, which are a leading cause of business failure, explained James Stefurak, managing editor of Invoice Factoring Guide. If you have a chronic late-paying customer, which we all do, try a different approach instead of badgering them with repeated invoicing and phone calls. Change the terms of payment to 2/10 net 30. If the consumer settles the invoice within 10 days, they will receive a 2% discount off the entire amount. Otherwise, full payment is payable in 30 days. Number 6. Make tax payments in installments. If you're having difficulty saving for your quarterly estimated tax payments, consider making them monthly, according to Michelle Etzel, owner of Bayside Accounting Services. Tax payments can then be treated as any other monthly operational expense. You can also streamline your tax payments by using the best online tax software systems. Number 7. Keep an eye on your books. This is an obvious practice, yet it is critical. Even if you work with a bookkeeper, try to set aside time each day or month to check and monitor your records. This will allow you to become more acquainted with your company's finances and offer you with insight about potential financial crime. Do not neglect bank reconciliations and spending some time each month reviewing outstanding invoices, advised Terrence Channon, principal of Newled LC. Failure to do so, particularly if a bookkeeper is involved, exposes the company to wasteful spending or even embezzlement. Number 8. Pay attention to both expenses and ROI. Measuring expenditures and return on investment, ROI, can provide a clear picture of which initiatives are worthwhile and which are not. According to Deborah Sweeney, CEO of My Corporation, small business owners should be careful where they invest their money. Focus on the ROI that comes with each of your expenditures, she advised. If you don't do this, you risk losing money on irrelevant or bad spending bets. Understand where your money is going and how that investment is paying off. If it isn't paying off, reduce back and focus more on the projects that do work for you and your company. Number 9. Establish healthy financial practices. Establishing internal financial standards, even if they are as simple as committing a certain period to analyzing and updating financial information, can go a long way towards maintaining your company's financial health. Keeping track of your finances might help you avoid fraud or risk. As a small business, we are frequently short on time and money, and we have vastly inferior technological capabilities, Collado explained. This is particularly critical if you have employees. Weak internal controls can lead to employee fraud or theft, as well as legal issues if you or an employee do not follow specific regulations. Number 10. Plan ahead of time. There will always be company difficulties that require immediate attention, but when it comes to your finances, you must plan for the future. You're behind the competition if you're not looking 5 to 10 years ahead. In the end, the significance of controlling your company's finances. The most critical step for any business owner is education. Understanding the fundamental skills required to run a small business, such as simple accounting duties, loan applications, and financial statement authoring, allows business owners to construct a stable financial future and avoid collapse. Furthermore, organization is a key component of good money management. Don't be afraid to seek professional advice, but make sure you have a handle on the day-to-day administration of your company's finances, as well as a long-term plan. See you in next video.